The Morning Drive, time to talk personal finance. James Thomas is here. It's nice to see you.
Nice to see you too. Good morning.
Good to have you back in the studio. There's a number of stories out at the moment that I want to put to you. There's a lot of technical stuff around at the moment. We're in a confused time, and I think a lot of people are in this. I keep talking to people and saying it's like a holding pattern because you don't know what's going to happen.
No, it's very that. Very unnerving, very unsettling. On a personal level, let alone finances. But if we're talking purely about finances, which is what you've got me here for,
you can talk about personal stuff if you like. How do you feel today, James?
Oh, thank you.
That's all right. Anytime.
Deep.
Really, I am absolutely the opposite of deep. But you're right. And if you're unnerved kind of personally because you're not sure what's going on, it's an unusual situation. Finance is very close to that because you worry about that. Obviously.
But one of the things we often say in the office, if everything was just going swimmingly, ticking along, there'd be no need for financial advisors, for planners, for people to talk to you, to have a professional opinion about what to do, because you would simply just put it into a bank account or a market or whatever, and there'd be no fluctuations, no changes. If life just went in a perfectly straight line, again, there would be no need for that advice. Now and again, I'm not saying we want to have the situation we're in at the moment, but it's just one of the things that life presents us, and therefore we have to react to it and deal with it.
It's something that you learn, isn't it?
Yes.
The biggest lesson I've learned as an adult, and I use adult under advisement, obviously, is the thought that, okay, so an obstacle will befall me, if you like, a problem will happen. And as a younger guy, I'd be like, I'd stick my head in the sand. But now I just think, well, I have to face it. I don't want to.
Don't want to face it necessarily, but it's there.
Yeah, and you have to.
And you have to, yeah.
Yeah, this has become a deeper conversation than I intended. But it's an interesting point, and you're absolutely right. These things are here, you deal with them, and that's what we have to do. And the conflict involving Iran has moved into we're well into the second week. It's creating a ripple effect across many different things. And among those things, savings, investments, daily costs, etc. So personal finance is very much part of this. Number of key stories impacting our wallets. I sent you this last night, doing some research, and there are 5 or 6 things that I think are important to consider. Oil prices is the first thing, I guess.
Yes, and I think that's the largest, obviously, of the personal issue. But from a financial point of view, absolutely, the oil and indeed gas price are the 2 biggest issues that will send ripples around the world. Because as much as the world has been trying to move away from hydrocarbons, it's still very much driven by them. And obviously, this part of the world produces a large percentage of the world's hydrocarbons. The large majority of which, from my investigations, are going east, which is why I believe if you're looking at the stock markets, the Far East have been far more volatile so far than Europe and America, because I think they're already looking at the impact that these increased prices will have, and then their supply is coming from here more than other parts of the world. So yes, it's certainly something to be aware of. Already, petrol, gas prices are increasing. There's headlines that airlines will start to add a fuel surcharge again because their prices, obviously aeroplanes use up way more fuel than cars, and obviously therefore that price will have to be factored in as well.
Yeah, Brent crossing $104 at one point. It's around
bouncing around
the $90 to $100 at the moment. So that's a double-edged sword in many ways, but it impacts the cost of living. Obviously, that's one thing that.
I mean, the notes I added to that. Obviously, we're slightly cushioned at the moment here in the Middle East because certainly in the UAE, our fuel prices are set or managed by the government. But obviously, at the end of the month, unless things change dramatically, I suspect we'll be seeing an increase in those prices. The article then mentioned, obviously, the following on impact on price of goods in shops. Again, the staples, the essentials. I believe there's a price monitoring by the authorities, so they can't just be jacked up with no allowance or just because they're trying to profiteer.
Well, you have to be ready for some rises,
but you still
because
have
of
to be
shipping
ready
costs,
for shipping
et
costs.
cetera.
Absolutely,
absolutely
yes.
right. So that's reasonable. So that's something to be taking
Yes.
to take into account. You mentioned market volatility there, the
Yes.
idea of safe havens as well. Regional stock markets have seen some pretty dramatic shifts. The ADX, the DFM closed for a couple of days, of course.
Yeah.
But naturally, markets are pretty sensitive to to the impact of news cycles, aren't they?
They are, and especially unexpected, but certainly shocks such as this one. Yeah, I mean, obviously, no one wanted the situation to progress as it has, and therefore the local markets have been hit very hard and have fallen accordingly. Or I'll caveat that with, I'm sure once there's some resolution, they will recover, because as we've seen in past crises and situations such as this, there's a fall and there's a rebound. And it's just, we never know. We're all sitting here thinking, the disbelief of what's happened, getting used to the new normal that we're faced with, but hopefully then reaching some form of conclusion, which obviously we all hope is some cessation of hostilities, and then we will see markets initially stabilise and then recover.
Okay. Gold at the moment.
Gold,
Gold
yes.
is, obviously seen as the traditional safe haven. The gold story in the last couple of years has been extraordinary.
Extraordinary upward movement, yes.
It's the level at the moment for gold. It's around about $5,200. Is there any change in your opinion? Is there any change in your advice to people who consider gold, or maybe reconsidering gold as part of construction of a portfolio? You not at all.
I still would very much hesitate to say to people, pile into gold now. One, because of where its price is. It's historically very high. Are you going to see, a big increase in that price and where it is? Possibly, but the trend over the last 2 years is you've missed that upwards movement. Right. But also, as let's quote a much more intelligent man than myself, Warren Buffett. His view is very much, I think all the gold in the world will be a mile by a mile by a mile cube. But for the price of that, he could buy the entire S&P 500 and all the companies and all the dividends and the returns that could generate. And his view is that those stocks are a far better place to invest into. And I would still concur with that general view that stocks and shares, investments in companies, will give you, over the longer term, a better return than gold. Sound advice. Let me ask you a little bit about cash, because Super Hans is watching. That's part of the handle. I won't read you all of the handle. Okay. Should I keep more cash? Watching from Dubai. I'm a bit worried if I might need it at the moment. Is that a good idea? Well, as we always say, yes, cash is having an amount of cash, 3 to 6 months salary, and perhaps even a little bit more at the moment, just for that emergency requirement. But would I be recommending in cashing investments, for example? No. Keep things invested at the moment. The worst time is to sell is when markets have fallen. But to have cash around you, yes, that's obviously a good thing to do. A sensible thing. I mean, yes. As much as anything, it kind of strikes me. Tell me if I'm speaking out of turn, but just the awareness that you have ready cash available, I think for a lot of people there's a comfort level in that. Absolutely. Yes, that's why we recommend to have that 3 to 6 months in, as I say, as you say there, inaccessible, ready to go. Can be not in a fund that you need to sell, wait 3 to 5 days to get the fund. No, in a bank account you can go to, withdraw and use the cash if you needed to. And yeah.
Okay. Look, we've got 10 minutes or so, and I wanted to get into another story, and this is something that you sent through, but I think it's an important story for a number of reasons, and it's an important story in particular at the moment for a very obvious reason. It's a report from S&P, the ratings agency. It was being reported on, it's a couple of days, Tuesday, I think this came out. The bottom line is that S&P Global Ratings have affirmed the UAE's AA sovereign credit ratings status. So, and the outlook, as far as they see, is stable. It comes at a time when, it's welcome news.
Yes.
That's the obvious side to this. Interesting, because they note that the UAE holds strong financial buffers that allow policymakers to respond if regional tensions disrupt energy markets or trade, which is something that inevitably will happen to an extent. But I'm just interested in your kind of broad thoughts on something like this and the timing that this comes out. I mean, these reports are issued regularly.
They
of
are.
course.
They're usually quarterly, but again, I sent it to you because I thought it was very pertinent to the current situation. People are obviously understandably concerned. The uncertainty, the current situation is generating. But S&P, who are a well-renowned global organisation, are still looking at the region and giving it a stable rating. So their view seems to be that even with the things that we're experiencing at the moment, that the region will maintain its status and indeed continue to grow, is how I read their report.
Well, see, what's really interesting about the timing is it's one of the kind of bylines to it, if you've read any of the reporting around this, is it's the 6 reasons that you can take from this. I think this was a Gulf News article I was reading, why the UAE can withstand shocks from the escalating conflict that we're seeing. And that, I think, was really interesting, because if you look at these particular factors, and let's break them down slightly, it gives you that additional context on exactly where the country is. And I think there's a level of confidence from that, obviously. Huge financial reserves was the first one. And S&P estimate the country's consolidated net asset position is about 184% of GDP this year. It's an incredibly strong position. Government liquid assets calculated around about 210% of GDP as well. So that's the first kind of sign.
Very much. And again, starting to talk about GDP, gross domestic product, what does that mean? But it's really just a sign of the strength of the country. If you compare that to many Western countries, are in a very different position. That they have nowhere near those positive reserves. They are actually in debt, and it is the debts that are bigger than the GDP, not the cash reserve. So it's worth emphasising that while we're all experiencing this to lesser and greater degrees, and it's very unsettling and unnerving and just not what we would hope to be living through, the country is well placed to manage the economic impact of it.
Yeah, and there's a financial shock absorber there.
Yes, a huge financial shock absorber. There's a big spring, a big damper, call it what you will, that can absorb and be able to use those resources to restore the country to where it was.
You mentioned debt there as well. UAE has pretty limited public debt. S&P estimates general government debt around about 27% of GDP in 2026. Very low by international norms, of course.
And with the number you just mentioned on the cash side, it can service that debt very adequately for many, many years to come.
That's exactly the point. Government finances are strong. We know that. S&P say the UAE's budget has recorded an average surplus between 2021 and 2025 of something like 5.6%. They expect that to drop slightly this year, perhaps. But what that tells you, and what you can obviously glean from that, is control over spending.
There's a lot of control, a lot of fiscal management, but very strong fiscal management.
Yes.
There's not been even though sometimes you may look at the developments and think, wow, is there really the demand for that? When you then look at from a much higher level, the fiscal management seems to be very strong and very disciplined.
It's always that interesting thing, because you look at, I always kind of look at developments in shopping malls and I think, do we need another mall? And then I go to the mall a couple of months later and it's packed. And then I read the stories about the real estate developments and you can't get one.
No.
You can't get a house there or a flat there. And I end up thinking, I don't know anything.
It does often lead you to that conclusion. But these numbers seem to suggest and back up the theory that actually the government have managed things extremely well and have been very disciplined with how it's been managed post-COVID.
Non-oil growth. Oil is obviously a major part of the economy. S&P say non-oil sectors are about 75% of the country's GDP. So that allows you some room to kind of maneuver, withstand volatility, of course, because you're not really reliant on any one particular product. Oil is obviously the standout. From an investment perspective, S&P are writing that government investments, sovereign wealth funds, play an important role in supporting financial stability as well. And you obviously have the likes of ADIA and Mubadala, ADQ, Investment Corporation of Dubai, etc. They manage major global portfolios.
Huge. And again, that's another important point, that it's not just investments here in the UAE. No. These sovereign wealth funds hold investments around the world. So even if their local investments are taking a short-term hit, a lot of these investments will not be here anyway. So that the government and the sovereign wealth fund is receiving funds, income, dividends from those international investments.
And another buffer, if you like.
And another buffer
zone for the economy is the point. It's interesting perspective. The last thing that kind of jumps out from this reaffirming of status, I suppose, is the banking system. So, in pretty rude financial health, really.
Yes. Yeah, in a summary, it does make for a strong view of the economy and the banking sector, yes.
And what was it? I'm looking for the quote. Here it is. According to the S&P report, the sector has shown, you'll like this is a great phrase, strong resilience and financial soundness over the past few years. And
which again, when we're talking about the question that came in, if your money is here, it's still... It's in a resilient, safe space.
It's just what interests me about this is the perspective at this time. And when you look at this, because one of the things about a moment like this is you're uncertain, somebody says something, it spreads like wildfire, and all of a sudden something that is perhaps not based in absolute fact becomes absolute fact.
And it becomes that so quickly.
It's the speed at which that happens. Take a step back
and actually look for the source.
This is the point with this. The source of this is government data, but this is an independent view of government data from outside. And when you boil this down, it's kind of dull. It's kind of boring. I get that.
I'm conscious it could be viewed as that, but actually in these times, that's a good thing.
Yeah, exactly right. And this is the thing. This is why you want the guy in the boring suit in charge of the money.
Yes.
That's really a terrible stereotype.
It is, but it's the truth of the matter. These people know what they're doing. There's clearly some very bright minds running the country, and they're managing things very well. And that's then been backed up by a global independent ratings agency whose report is very positive.
And you're not being paid to say that. This is the other thing. Let's just say that. Not. I asked you at the start of this, I said, how are you feeling? But I'm actually going to ask you that seriously. How do you feel at the moment? Bearing in mind what we've talked about this morning, how do you feel from an economic
From an economic perspective, I still think this is one of the strongest places to be. Yes, it's taken a battering. Yes, its global reputation has been harmed, but I think it's temporary because, and I think I'm actually looking forward, if that's perhaps slightly optimistic, but how we recover from this, because I think it's going to be, again, the minds will already be working on a strategy, a plan. There will be a very strong recovery from this.
Optimism's not a bad thing, James Thomas.
I think we've got to be optimistic.
I keep saying that, and that's not going to change. Always good to talk to you. Appreciate you coming in.
Thank
James
you.
Thomas is an independent financial consultant, advisor, etc. This is Mirror Business FM.